Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. With all the major economies of the world enjoying a period of synchronized growth, a very clear consensus of opinion is evident across the investment community. Rising interest rates in the US and UK and an end in sight to quantitative easing in Europe and Japan have prompted a move away from fixed interest securities, and there is now a clear preference for equities. In the UK, concerns over Brexit loom large. The consensus of opinion appears to be that while valuations may be attractive relative to international comparisons, the lack of clarity over the nature of Britain's withdrawal from the European single market makes investment in the UK less certain. There is an acknowledgement that despite stock market indices reaching record levels, many of the UK's leading companies are languishing well below their high points. However, investors are finding more attractive opportunities elsewhere in the world, and for the time being the UK remains under pressure, with the market down 2% over the last month. In the US, economic growth remains strong and corporate profitability robust. However, interest rates are set to move higher through the course of the year, and conjecture over whether there will be 2 quarter-point hikes or 4 is dividing investors. The benefits of President Trump's much-vaunted tax reforms have been priced into equity markets, which were up 5.7% in January. However, the jury is still out on the effects of applying this level of stimulus at the current stage of the economic cycle, and there are concerns it could mean interest rates rising further and faster than currently envisaged. The focus will remain firmly on inflation, with wage inflation especially seen as a key metric. Europe has also been very strong, up 2.5% over the month. President Macron appears not only to have galvanized the French economy, but that of the whole region. And although structural imbalances still exist, for now they remain concealed under a cloak of economic prosperity. In Germany, Angela Merkel's difficulty in forming an effective coalition government is seen as largely irrelevant, with all parties except the far right committed to the European project. Only the forthcoming Italian elections and the rising strength of the euro present possible headwinds in the near term. Turning to the Far East, Japan is finally enjoying a period of sustained economic growth. Shinzo Abe's radical reforms have finally borne fruit, and although Japan's program of QE is beginning to be questioned, it looks set to continue for now, and Japanese equities were up 1.1% over the month. Emerging markets were the standout performer, gaining 8.3%. Asia-Pacific tech companies are very attractively priced relative to their developed world counterparts, and with growth in China forecast to continue at around 6.5%, prospects for the Pacific Basin appear underpinned. With the focus firmly on inflation numbers and on the interest rate response from central banks, financial markets could become choppy. However, multi-asset funds and our proposition are well positioned to navigate uncertain waters. Our wide diversification by manager style, asset class and geography will accommodate the risks, while our managers will seek to take advantage of as many opportunities as possible. Thanks for listening, and we'll see you again next month.
Welcome to this month's review of the True Potential portfolios. My name is Julius Polokas, and I'm an investment analyst here at True Potential. The format for today is that I'm going to spend the next few minutes talking about our flagship investment product, the True Potential portfolio range. First, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes we are seeing from our fund manager partners, and finally discuss what changes have been made over the month. Looking at the month of January, in general, the portfolios have seen a positive start to the year at the higher risk end, with the equity markets performing well, especially more developing areas. As we look further out, the longer-term numbers are excellent, illustrating advanced diversification working. Moving on to performance of the underlying funds that make up the portfolios, the new True Potential Goldman Sachs Balanced Fund, launched in December, performed well, with the fund offering excellent diversification, particularly against bond markets, which struggled over the month. The True Potential UBS fund range also produced good numbers for the fund range's ability to access returns. Looking at the key themes which are formulated after speaking to our 8 fund manager partners, our managers have continued to remain positive on the economic outlook. With all major economies of the world enjoying a period of synchronized growth, a very clear consensus of opinion is evident across our fund manager partners. Rising interest rates in the US and UK, along with indications of monetary policy tightening and the possible beginning of an end of quantitative easing in Europe and Japan, have prompted a move away from fixed interest securities. There is now a clear preference for equities. Bond portfolios are generally concentrated in short-dated maturities to insulate them from the effects of rising interest rates. We are also seeing an increase in the use of alternatives, structured products, long-short hedging strategies, and absolute return funds in place of traditional bonds. Looking at the changes made over the month, these have taken place within balanced and balanced plus portfolios. Within balanced, we have reduced the styles of Allianz, SEI, and UBS. Between them, the True Potential Allianz and SEI funds have the largest exposure to non-sterling currencies of the True Potential Balanced fund range, a negative should we see a sterling strengthen further. These two funds also have the longest fixed income duration and so are likely to be most sensitive to rises in interest rates both in US and UK. In addition, the True Potential SEI and UBS Balanced funds both have more limited range of alternative investment strategies to call on as we enter a difficult environment for the bond market. By contrast, we have increased the weighting to the True Potential Goldman Sachs Balanced Fund. This fund has one of the shortest fixed income durations out of the balanced funds and the range of alternatives it can use to provide returns that are uncorrelated to both equity and bond markets. Within Balanced Plus, we have reduced the weighting of the True Potential SEI Cautious Fund. This is to diversify away from the large exposure to one particular fund manager's style, as well to minimize duration and foreign exchange risk. We have increased the weighting of the True Potential 7AM Aggressive and the True Potential SEI Defensive funds. 7AM has a large allocation towards emerging markets, European and Japanese equities, which are all the areas that fund managers have been positive around. SEI Defensive has been increased to maintain the portfolio within the balanced risk band. For the rest of the portfolios, no changes have been made, with the 4 optimization factors of risk, cost, expected return, and risk-adjusted return always being paramount. In conclusion, the first month of 2018 has started relatively well for most of equity markets and continued the strong returns we have seen in 2017, despite sterling value strengthening. Risks are evident for investors, but the key to mitigate these risks is diversification, something we do by country, asset class, currency, and even fund manager styles within our True Potential portfolio range. Thank you very much for listening today, and I will speak to you next time.